All right, good morning, everybody. We have a special treat for you today. We got Marco Wutzer joining us for his insights on cryptocurrencies and the market and FTX and all the disasters happening right now. Marco, thanks for joining us.
It's good to be back.
Glad to have you here. So let's start. Just can you explain, summarize as best you can, what exactly has happened in the last few weeks?
Well, basically, we have FTX, which was the third biggest crypto exchange, where a lot of retail people were trading their cryptos, and also a lot of funds were using FTX. And there has been basically a big scandal where the whole exchange is insolvent because it seems that they were misappropriating customer funds. And so the whole thing has blown up with all sorts of collateral damage.
Is this like a Lehman Brothers kind of thing? Is that a fair comparison? Or
yeah, maybe Lehman Brothers, maybe also more like MF Global, where you had like a big institution where a lot of people held capital and then blew up, and basically your money is gone. So you could certainly make that comparison. I mean, maybe we can start this story from the beginning, because it's a very interesting origin story with a lot of head-scratching moments along the way, and questions of what really happened there.
Sure.
I mean, if we look back, 2018, 2019, around that time frame is when Sam Bankman-Fried, who is the guy who started this whole, or the Fried Bankman, as I like to call him, he started first like a little basically hedge fund market making outfit called Alameda Research. And they initially got their start in an arbitrage trade. Back at that time, you had what was called the kimchi premium, where Bitcoin was trading at a different price than the rest of the world. And that was something that people wanted to get into for an arbitrage trade. They were not successful with doing that in the Korean market, but they were able to do that in Japan, where Japan had a similar situation, very isolated, very cut off. So there was this price difference in Bitcoin between the Japanese Bitcoin price and the rest of the world. And they were able to set up a local entity there and do an arbitrage trade and run that for a while. And they made anywhere estimated between $10 and $30 million. So that's how they basically got their initial capital. Then, though, according to insider sources, they made a lot of stupid trades afterwards and lost most of that capital. So again, right here, it becomes questionable, where does the money for FTX come from, and how did FTX get so big so quickly? Because with that now really small capital base again, they then started to launch FTX, which is the crypto exchange. And now here then we get into another interesting situation, because now we have this conflict of interest. We have, on the one hand, Alameda Research, owned by Sam Bankman-Fried, or SBF for short. And then we have FTX, the exchange, also owned by SBF. And Alameda was the market maker on FTX. So they started this exchange, and immediately it attracted a lot of institutions, because basically what they were doing as a market maker to attract capital, they were quoting their spreads too tight. So a market maker quotes buy and sell orders with a certain spread, and they do this generally algorithmically to have a small profit margin. And they basically, to grow the FTX exchange, were quoting too tight. So that means a lot of institutions were going there because they had better liquidity there, and they were trading there. And that's how FTX initially took off. Which then also at the same time would mean that Alameda basically was a loss leader to grow FTX.
Right, exactly. They just got to make up for it on volume, which they apparently did, because they became the second largest or third largest exchange.
Third largest, I believe, yeah.
All right, and they apparently attracted something like 5 million, basically retail clients.
Yes, I mean, like I said, a lot of institutions were trading there. And then, of course, the retail audience, there's one group, I think, that is Americans, because initially they, I'm not 100% certain about this, but I read about this, so I'm not 100% sure if it's true. But initially, apparently, they didn't do any KYC AML verification, and when they started doing that, the old accounts were not checked anymore. So you have this like pocket of Americans that were trading there before they launched a separate US division, and because of I think problems opening accounts elsewhere. They had a lot of users in Hong Kong and a lot of users in Singapore as well, and even more in Korea. So they were very strong in Asia.
All right. And so what happened? Basically, they have these conflicts of interest, these two different organizations, the market maker, they bring in all these millions of retail investors, these big institutional funds. What happened?
Yeah, so basically they expanded over time. So we have now the market making company with like a suspect profitability. We have the exchange that's growing very well, and the exchange was also very profitable, the exchange itself. But then they got into venture. Now, what does that mean? They're going into new crypto projects and funding them in seed rounds. And this is now where we have to look into the details, because there are two aspects basically that are important for this. With these seed rounds, you make a big investment. I mean, Alameda and FTX, they were both involved. First, it was Alameda. When Alameda got a bad reputation, they moved it under the FTX umbrella. But basically, they make large investments, tens or even hundreds of millions of dollars. And this is then illiquid, because typically these seed rounds, they have long vesting periods where you cannot access or sell these tokens. But then something very peculiar also about these projects, a lot of the projects they invested in, SBF was one of the biggest supporters of the Solana ecosystem. So they were financing a lot of projects in the Solana ecosystem. But the way they structured that is that they have a large total amount of tokens, but only a very small float. So only really a very small percentage. Let's say you have 100 million tokens, but only 2 million tokens are actually trading. So with very little capital, you can pump up the price of this token because there are so few tokens around. But then you have a fully diluted valuation of, say, $1 billion. So you can create this phantom valuation of something that is very illiquid, that has actually very few traders, and it doesn't really have this liquidity. Like you have a paper value of $1 billion, but it's not a value you can realize. But what FTX then did is they said, look, we have $1 billion in assets here, and then they borrowed against that. And they did that at scale.
These assets were their cryptocurrency that they conjured out of thin air.
No, it was not their cryptocurrency. Okay. I mean, they used that probably also to borrow against, but I'm talking about now all this venture book that they built up with lots of different projects that also they all have a lot of tokens, but with a very small trading supply. And then they pumped up the fully diluted valuation of that. So now they have billions in value there. That is basically a house of cards where there's actually no liquidity there. And they said, here we have 10 billion in assets. I want to borrow, I don't know, 5 or 6 billion against that.
Let's lever it up. Let's lever it up.
Yeah. Let's lever it up. And now we get to the crucial point. At some point, their balance sheet was leaked. I saw it first on Twitter. Apparently, it was first published on CoinDesk. But anyway, what was seen on this spreadsheet now was their balance sheet looked basically like a retail book with all sorts of shit coins and no sophisticated hedging, nothing, and everything very illiquid. And Binance was one of the first backers of FTX. So they had a multi-billion-dollar share in FTX, which they already had sold out of, mostly in stable coins, but also in a big position of the FTT token. And FTT token is the native token of the FTX exchange. So that's basically the valuation of the exchange is reflected in that FTT token. And so Binance says, okay, this looks very shaky. And we have learned from the Luna collapse we had earlier in the year and the Three Arrows Capital collapse that we did earlier in the year. We're not taking any risk here. And they still had $584 million of FTT tokens, and they said, we're going to dump all of that. And then immediately there was kind of panic on the side of FTX and Alameda, and the Alameda CEO immediately came down and said, let's do an OTC desk to not ruin this for retail investors, to not hurt retail investors. We're interested in buying the entire position in an OTC deal, which basically means over the counter, so you do it directly without involving the market itself.
And she said that publicly, right? She said, let's do it. She said publicly.
Yeah. All of that happened on Twitter, and all the back and forth, the arguments, all of that happened on Twitter, to which CZ, the founder and majority owner of Binance, and basically said, screw you, we market dump all of that. So he was smelling a rat, he was smelling the weakness, and he started dumping it. And that, of course, then caused the bank run. Billions of liquidity were basically withdrawn from FTX. And that's then where the reality surfaced. Because what should really be the case is that on the one hand side, you have customer deposits, and they are like holy, right? You're not allowed to touch this. And on the other side, you have your own balance sheet and your own investments. But now they had all this leverage based on their illiquid order book, and they had capital calls where they had to pay back loans, and all of a sudden they didn't have the liquidity to bring that money. And that's where they dipped into the customer funds. And then when they had the bank run, then the whole thing, the whole house of cards came tumbling down.
So that does sound like MF Global.
Pretty much, yeah.
Listen, all I've got is questions. In fact, ever since Bitcoin started, all I've had was questions. And I answered some of them incorrectly. I remember in 2013, someone actually gave me a physical Bitcoin. And I listened to the argument for it, that it was money. It was a gold substitute, if you would. And I didn't jump on it. It was only $13 back then. I do remember that part exactly. Because it didn't seem to me to qualify. It didn't check all the boxes for a good money that would last, because I couldn't see the value proposition. I couldn't say, well, what is the use of this? I mean, how do I stop from just holding the bag with a worthless digit that I can't use for anything? In fact, I can't even see it or touch it. Well, of course, I missed the value proposition, which was that it was an excellent transfer device that obviated banks and obviated foreign exchange controls and gave you immense freedom to all that stuff. I missed that. Okay, now, since then, there have been 20,000, I guess, other cryptocurrencies that have come on the scene. And most of them, I think you described, Marco, as shitcoins. And it seems to me that maybe almost all of them are, because what do they do? How are they going to make your life? How are any of them succeeding in making your life better? And what makes them unique? And how can I be sure whether one of these coins is a scam, a shit coin, or the next Bitcoin, except in a different area? I mean,
well, the best way is to subscribe to Marco's newsletter, Project Serenity, is probably the best way.
Well, I mean, the thing is, you have to distinguish. I mean, what you said is absolutely true. From the 20,000 coins, you can probably reduce this down to like 1,000 or 2,000 that are serious project, and the rest is like doesn't have any inherent value. But what is very important to understand for somebody that's new to the space, there's Bitcoin, which, as you described correctly, is a great transfer mechanism, and over a long period of time is a good store of value. So let's call it digital gold. So that is the money function of it. But most of these other coins, they're not trying to be Bitcoin. They are simply basically shares in projects that do different things, that offer a different value proposition. Because what is happening now is that we have basically the legacy financial system with all its financial products, and we're rebuilding that in a permissionless, decentralized, censorship-resistant way. So you have all these different protocols that do specialized financial things, or even other things that go beyond financial use cases, and they also need a token to work, because you need to have this financial incentive to make a blockchain work. So they can become valuable because somebody uses, let's say, an options trading platform, but they're not trying to compete with Bitcoin directly. And that's why we have so many of these coins. Now, an argument can be made that Ethereum will actually become, within the next few years, more valuable than Bitcoin, and will be a better money in that sense, because if you look at inflation, the inflation is now really small with Bitcoin already. But Ethereum has recently made a change to the way its system works. And so it has a very, very tiny inflation. But when the network gets used a lot, then a lot of these fees get burned and it actually becomes deflationary. So very few people are actually aware that the hardest money in the world right now is actually Ethereum and not Bitcoin. And because Ethereum offers also this whole decentralized finance use case with all the smart contracting platform, basically a decentralized computer where you can run all of these censorship resistant and permissionless platforms on, because it brings all of that to it. It has a very serious chance to overtake Bitcoin as a money in that sense, but really only Bitcoin, Ethereum, and maybe a few others that you can put in this category that actually like compete for the money part of it. But there's a whole world of other use cases out there that also need tokens, and that's why you have so many of them.
But if Ethereum could make this one change recently, why couldn't they make other changes that are less favorable, perhaps?
Well, they certainly could, but it requires consensus. It's the same thing with Bitcoin. You could also modify Bitcoin, but it requires a majority consensus of the participants that everybody agrees that this is a good change. Otherwise, the change is not going to happen. And the larger the network is, the more difficult it is to make a controversial change, because there's this ideology that Ethereum has, there's this ideology that Bitcoin has. So now if you want to, let's say you want to change Bitcoin and make it ultra inflationary, that goes against everything that Bitcoin is standing for. So everybody will, of course, deny that, and this change is not going to happen. But technically, yes, of course, you could make any change.
Well, I think there's almost three categories of these things in my mind. There are the these software utility tokens that are just designed to, as you were describing, to basically permissionless whatever, domain names, things like that. Then there's the money part, and then there's the financial shenanigans part, which is, I think, the biggest part of this, at least the part that has drawn so many people in the last couple of years. And, and certainly I think there's been this cycle before with Bitcoin, but and when we had the ICO period, a few years ago where everything got run up. The last time Bitcoin hit, almost 20,000, when it hit the high back then was 2018, maybe 2017. So there was that. And then lots of scams in these ICOs. And essentially, as the market for Ethereum and Bitcoin rebounded, seems to me that those ICOs never really stopped. And they're kind of ended up being this most people got into crypto because they wanted a Lamborghini, I think. Right?
Yeah, of course. I mean, you have to look at this on a long timeline. If you compare it to the internet has been around for decades, and the interesting, cool e-commerce stuff and social media and all of that came only after years of development and a huge user base. And in crypto, it's the same way. If you look at it from a long enough timeline, is now the first killer application is money. That's why we see this focus on money making, on the financial system, on all the decentralized financial products, because all the other really interesting use cases where you basically own your reputation and your identity, and you can move it with you on any social network you want to be in, or on a permissionless decentralized e-commerce platform, all these kinds of things, or decentralized Uber or Airbnb, something like that. That requires more users. That is not viable yet because we don't have enough users yet. And also from a technology side, if you compare back with the internet, a lot of the use cases were not viable. You couldn't have YouTube with dial-up connections. Now that everybody has broadband, YouTube is huge. And it's the same with blockchains. They were slow and inefficient, and there are still huge quantum leaps happening in the terms of computing capacity and transaction capacity, and also storage capacity. All these things need to be developed, and they still need to get to a point where a lot of these use cases first become relevant. I mean, if we look at social media, for example, I'm dying for a decentralized replacement of Twitter or Facebook, where I own my reputation, where I can be in control of everything, where there's no censorship, but it's still just a few years out still. And that's why the focus is very much still on the financial side of things.
Yeah. Okay, that makes sense. But what do you think the impact, because this FTX thing is falling apart, there seems to be some contagion that is spreading throughout the broader ecosystem, and may even cross over into the traditional finance world.
Yeah,
that's quite possible. So
I mean, sorry, go ahead.
Does this destroy the crypto? And I mean, a lot of people are going to be done with after you have your. I mean, I lost all my money in Mt. Gox years ago, but it wasn't that much. It wasn't that much really. So it wasn't that big of a deal. But there are a lot of people who had, and not just individuals, hedge funds who had a huge amount of capital.
And that's where we're getting back to FTX and all the fallout, because there are a few very major important takeaways here. And I'll get to the implication for the crypto space after that. So the two biggest takeaways from this is that, first of all, you always need to self-custody your assets when you do anything in crypto. There's the famous saying, not your keys, not your coins. And I've been saying for years to never leave any funds sitting on exchanges. To have control over your own funds, to be sovereign with your funds, requires that you take responsibility for them, because if you leave them in an exchange, then it's no different from having money sitting in a bank account. So you're no better off. So that is a very important learning lesson that unfortunately millions of people now learned once again the hard way. But I guess a lot of people just have to learn that way. So that is the most important takeaway, I would say. So if you're new to crypto, if you're getting into crypto, or even if you're in crypto already and you're having your funds sitting on another exchange, that's the first lesson you should draw from that, that you have to hold control over your coins, and you need to set up a wallet for yourself. The second very big takeaway is that FTX is basically operating like an unregulated offshore shadow bank, that does whatever it wants, and that is very much a part of centralized finance, because everything that is actually in decentralized finance, in DeFi, is completely ethical, is completely transparent, is completely permissionless and censorship resistant, and nobody can corrupt this system. So the second major takeaway that you have to take away from this is that it's yet another centralized player that went down here, just like all these centralized lenders that went down with the previous crash with 3 Hours Capital. And the DeFi actually worked great. If you see where the problems were, the first loans that were paid off, they were all the DeFi loans, because you cannot like sweet talk a smart contract. It's the code is the law, and this is why it works, and this is why it's uncorruptible. And so we're seeing basically over the entire course of 2022 a whole bunch of centralized players where they either like these yield generating things where they say, oh, give me your money and I give you 10% on that, but then in the end you see they're just like a murky thing where on the back end they gamble with your money, and in the end it's all gone. All these centralized things, and that includes the exchanges that are basically just a stepping stone to get to a completely decentralized world, they are the problem here, because the blockchain ecosystem is a free market, and a free market recovers very well from this and has absolutely no problem. So actually, for the future of DeFi, this is a good thing, because more and more of these centralized players, they go bankrupt and they go away. There's, of course, a lot of short-term damage to people that lost money and reputational damage, because this distinction is not clear for many people. But if anything, it's a long-term plus for blockchain-based technologies and a decentralized financial system.
That's true. I mean, you can even see that I was looking for this tweet I saw earlier that showed how much Bitcoin had been moved off exchanges in the last couple of weeks. And it's just unbelievable. And you're like, this should have been done a long time ago. People should have been doing this. So I do think that's a super positive move for Bitcoin, at least. But, so to me, my worry, I guess, with all of this is that I think that, not even worry, I think it kind of justifiably condemns a lot of the things, the shenanigans that have been going on for a while. This whole year has been this way, from Luna, which yes. What was Luna? I mean, how would you describe Luna? What's the simplest way?
I mean, Luna is basically was a stupidity trap, because that was a decentralized system, or let's say a blockchain-based system. But anybody who looked at the financial mechanics, how it worked, could easily see that at some moment this will death spiral. So you have to be a degenerate gambler to participate in that, or you have to be really stupid to not see that.
You have to be totally bought into that crypto is different and different rules apply, I think also. And so a lot of the hype around crypto kind of, where people, people who are new to it come in and with no sense of what realistic
crypto is a completely free market. So you can have something that is really solid and really good and works really well, or you can something that is very poorly designed, a very bad product, and anybody is free to use it. But if you're not clever enough to choose a good thing over a bad thing, then you pay the consequences. That's the essence of a free market. But there was no inherent corruption in the Luna collapse. A lot of people say, oh, Do Kwon, the founder of this, should go to prison. I mean, unless they somewhere along the line misappropriated funds or something, which I don't think even happened, unless something like this happened, he didn't do anything wrong. He just created a bad product and people bought into it, and now they have to suffer the consequences for their actions, which is very different from these other collapses that we had afterwards with 3 Hours Capital, which was basically all a huge fraud, and now FTX, which was basically a huge fraud. And the rabbit hole goes even deeper in all the fraud that happened with FTX that we haven't even touched upon yet.
Yeah.
What was the value proposition for Luna? What was that what was a Lunar token going to do for you and get you?
Well, basically, they were attracting greedy people by having a system on that Luna coin that gave you a 20% yield. You could it had a system called Anchor Protocol where you could deposit money and then you got a 20% yield on it. But this was, of course, not a real sustainable yield that come from a real financial market. It was all just subsidized, and it was clearly obvious that the dynamics of the system, how it works, if enough people pull out at the same time, then the whole thing will death spiral and collapse. And this is exactly what happened.
But you couldn't use the Lunar token to do anything except what, generate 20% on each Lunar token. I mean,
but then you could sell those on an exchange for Bitcoin or US dollars.
I mean, the Luna is connected to everything else in the blockchain ecosystem, and you could use it as collateral for other things, or you can participate in other financial protocols or pay for other services. So it's all connected to each other. But Luna itself, like as a currency, there was really no real value proposition for it.
I think most of these things exist for financial shenanigans. I mean, that's really what Luna was all about.
Yes.
Okay, and that's what.
Well, and what was the value proposition in the FTX token? I mean, why would you want to have a whole bunch of them? What was it?
It had on paper until it was revealed that it's a complete scam. Or not scam, but fraud, because the exchange part was real, and there was a real business with real cash flows that had anywhere from like a few $100 million to $1 billion a year in profitability, because it was the third biggest exchange. It did a lot of volume, and the FTT token itself had a real value, because if you hold that token, then you pay lower fees on the exchange, and the exchange takes part of these profits and burns the FTT token. So it's like indirectly a dividend. So this is very similar to like owning shares in a company where you get paid a dividend.
I don't know. Give me an example of a token that's out there now that I want to own. I mean, for some reason, what's it going to do for me? I mean,
you could make an argument for any of the major blockchains, be that Ethereum, Solana, Avalanche, whatever the big names are, that are the basic core infrastructure that all the applications are built upon, that these tokens, you need them for the whole network to work. And as the network grows and gets more usage, the value of the token goes up. So this is not just a theory. This has been proven over time. And that's why these major blockchains became so big, number one being Ethereum. So this is a token that has real utility, real value. And that is not just a gimmick, but that you need actually for the whole system to work.
The problem with it is that you have to be very far, and this is what I think you're good at, Marco, is you have to be very farsighted in understanding how these might be useful in the future, because they're basically like, they're at the, like Doug, I think they call it the protocol layer. So like the internet, it's like TCP/IP. It's like that protocol for connectivity of computers. Avalanche and Solana, they're like that substrate that the software applications get built on. And it's a way to essentially, make profits if those protocols succeed, if software that is used by people, by consumers in the future, by businesses in the future, if it's actually used, and you own rights to the protocol essentially because you own the token, then it can pay off. But it's highly speculative, and you really got to know what you're doing when you're looking into it.
It is highly speculative, and it's highly technical, and plus you need the financial understanding of the token dynamics, and that's why you really need a deep understanding of all of that to really be able to actually evaluate it. So from the outside, not having this understanding, people cannot differentiate it, and that makes it problematic, and that's why so many people fall for so many scams, because for every good valid protocol and that does something really interesting and potentially big for the future, there are like 10 others that just copy it or are an outright scam and are just a money grab. And that's the problem, because with this free market, you have all of this activity, and you need to be able to differentiate. But if you're able to differentiate this well, and you find one of these protocols that then becomes like, let's say, an options trading protocol. Options trading is still relatively small, but in the future, it will likely trade hundreds of billions. So if you catch this now when it has, like, let's say, a valuation of $30 million, and then you hold it through that growth cycle, then you can make returns on your money unlike anywhere else in any other financial market. And that's what makes it so interesting from a speculative perspective.
Well, obviously, this is an area that needs severe government regulation.
Clearly. And I think we're going to get it finally.
Yeah, we're going to get it. So what's that going to do to the market? It'll tend to destroy it and build in distortions. It'll be a disaster. But what's going to happen now, Marco? Because of this?
Well, so here's another level of this corruption, and you'll really appreciate that, Doug. So basically, they had this hole, right, that they couldn't fill, and they took billions in customer funds to pay their debt. But they didn't only do that. SBF is part of the enemy class. He doesn't stand for freedom. He doesn't stand for the whole crypto ethos. He basically went to Washington, D.C. In a major lobby effort to get all of crypto regulated in a really bad way, obviously, and to create a monopoly for himself. And he spent something like $70 million or $100 million, not of his own money, but of your money, if you had money in the FTX. So he took customers' money to lobby against the freedom of the customers, against the freedom of anybody to transact. And that is just incredible, the level of depravity and corruption in this guy.
Well, of course, I don't trust anybody that has a hyphenated last name. I mean, it's...
Yeah. And it goes even deeper too, because they have a partnership with Zelensky in Ukraine for crypto donations, and hundreds of millions of dollars in cryptos moved first through FTX to the Ukraine, and then all of a sudden like 70 or 100 million appears again as donations for Democrats. So there's this whole money circle of corruption that happened there too. So this onion has many layers.
This guy was the second largest contributor to the Democratic Party in this cycle, beyond second only to Soros.
So in the way a bankruptcy may work is that any of the money which was given to other parties has to be disgorged. So do you think that, is there any chance that the Democrats or Zelensky or the Ukraine or God knows who else is going to have to cough up money to give it back?
Well, let me quote the great Doug Casey. The chances of that are slim and none, and slim is out of town. Or what is your saying?
That's the saying. That's the saying. Well, that's what I would say here too. Right? Exactly.
I mean,
it was an academic question.
Yeah. The thing is that blockchain transactions are final, so there's no clawback that you can actually do. But now the corruption goes yet another level deeper. Once they declared officially bankruptcy, 1 day later, all of a sudden, hundreds of millions, if not in excess of $1 billion of the assets that are now under the jurisdiction of the general counsel that's managing this bankruptcy, all of a sudden started moving to different wallets. And this is now you have two options to look at this. It could either be a hack or it could be an inside job. And the probability that that was a hack is very low, because immediately they had root access on a very deep level to so many wallets, control over the website, control over the app, that it's very unlikely that this was some kind of hacking group. So most likely a group of insiders said, oh, fuck it, everything's going to hell. Let's grab as much money as we can. So what little money that was left that belongs to the creditors, so the users of the exchange basically, now has been stolen on top of it. So it has been stolen twice basically.
Well, and it is interesting though that we know that he was a big contributor to the Democratic Party, and maybe it's just a coincidence that the day after the elections is when the whole thing falls apart. I mean, it does seem like there's a big money laundering scheme happening here in some way. It's hard to understand exactly what it was at this stage, but it seems to be a big money laundering scheme. And it's just interesting that it ended at the last, right after the election cycle.
Yeah, and that's why it's so important to understand that this guy was not crypto. He's the opposite of crypto. He's part of the enemy class. And in crypto, all of these shenanigans that he was pulling is completely impossible. I mean, that's the whole value proposition of crypto, that you have an ethical system where you don't have any censorship, where you don't have any backroom deals, and where you don't need to trust a third party. That's the other key issue. SBF was a trusted third party, and the blockchain ecosystem removes this requirement of trusting third parties.
Right. Huh.
Have they had a chance to invite him to the World Economic Forum yet in Davos?
Oh, no, he's been there many times.
Oh, is that right?
Of course, FTX was an official partner of the World Economic Forum, featured on their website and everything. So it just goes to show that he's part of the cabal. And what we talked about with this money laundering, like, who knows how much of this has really happened? You know, maybe this is even much bigger than we even think it is.
Yeah. So let me ask you a specific question about Bitcoin, because that's my preferences in this whole space are always related to Bitcoin. How badly do you think Bitcoin's price will continue to be damaged by all of this? It seems it's certainly been in a down cycle. How low do you think it goes before it starts to?
Yeah, so that is a very good question. If we look at the Bitcoin market cycles, they're very clearly defined 4-year cycles. And this entire year has been a really rough bear market. I mean, we had the major collapses that we just talked about, but we are now, from this 4-year cycle perspective, in the timing band for the low. And typically, I mean, we already saw like volatility fizzling out and things going sideways for a very long time, which is a typical indicator for getting close to the end of a bear market. But then the actual end of the bear market is typically like a huge drastic move down, which is exactly what we had right now with this FTX blow up. So for me, I am convinced, and of course I could be wrong about this, but I'm convinced that this was the final bottom, and we've already seen the bottom when it dipped to the very low a few days ago when this all happened. So now basically we're not going up right away, but we're building now a base for the next bull run that's coming 2023, 2024. So most likely that low that we've seen with the blow up of FTX was the ultimate low of this cycle.
Interesting. Okay, so what do you think? I guess there's so many other interesting things that reminds me of an MF Global with this, is the fact that this character SBF doesn't seem to be in much trouble yet. You would think that Corzine, basically, I'm pretty sure he walked scot-free on that whole thing. That's the way I remember it with MF Global. This guy's now, there was a New York Times puff piece that was written about him yesterday, basically talking about how he was, effective altruist or whatever. And, talking about his good philanthropy, not mentioning the fraud or the 5 million customers who lost everything in their accounts. No mention of it at all. Why do you think I guess I think I know your answer. Is it because he's part of the cabal that you think that they're just?
I mean, it's highly likely that he's part of the deep state. I mean, if you really want to put on your tinfoil hat, then you can say he was a plan to destroy crypto, to bring in regulation, because that's the other thing. The regulation that he lobbied for, that he caused to exist in the first place. Now everybody's saying, oh, we got to do something about crypto. Let's push this bill forward. So it's maybe he was really a plant, but even if he's not, what you can certainly see already, what is obvious is all his connections to the deep state and to the World Economic Forum and all these things, and so certainly that's where things lie.
Think he'll get away with
it? I mean, that's no longer speculation. I mean, this all just now coming to light. The question is only like, how deep does the rabbit hole go? And also, I mean, he's not being arrested. That also should tell you something, because it is abundantly clear the level of fraud that happened, the level of damage that happened, and apparently he's still sitting in his $40 million penthouse and hasn't been arrested. So this level of protection also points in a certain direction.
So what happens to crypto from here?
It's very easy. There will probably be some type of negative regulation that will then, of course, mostly affect the American market. So that just makes the US less competitive in general. But DeFi, being permissionless and censorship resistant, couldn't care less. We're making a bottom now. We're picking up the pieces. It's very important to also understand that a lot of blockchains and protocols are seeing an all-time high in usage and adoption. So the blockchain ecosystem keeps growing and keeps growing. There's every day more and more developers that come into the ecosystem and building, and more cool stuff is being built, more great apps. And at some point, we get out of this bottom phase, and then then we go much, much higher, and sentiment, always lagging behind, will only turn bullish again for crypto many months from now at much higher price levels. But for the smart speculator, now is really the time to deploy more capital, because it doesn't matter if we dip another 2,000 lower in Bitcoin, or if we've seen already the ultimate low. This is just a tiny difference. Important is to get positioned for this next huge cycle that we have coming up, and that's going to happen 2023 and 2024. And one other thing about this upcoming cycle: in the last cycle, that was a very muted cycle that didn't really blow up huge. It had this rounded double top, no mania phase. Everybody was talking about the super cycle, this will go crazy. And I don't think this was wrong. I just think that this super cycle, where things really overshoot to the upside, is the next cycle that is coming. If you look at the geopolitical backdrop, with all the problems we have in the world, financially, with the war and everything, the inflation, I think now we have a really serious chance to overshoot to the upside, that we not just have a regular growth cycle like we typically have, but that on the a valuation that would be fair, that we overshoot to the upside to the entire macro environment. And on top of that, in the developed world, with crypto adoption, we're reaching now around the 10% mark. And there's a universal adoption cycle in technologies. And when you reach this 10% mark, then you reach the spot where the growth goes almost like vertical. So all of this is coming together for absolutely crazy gains in crypto for the next 2 years. So the sentiment right now is really terrible, but the opportunity couldn't be bigger.
Well, I think one of the big things for me is it just seems like there's a next shoe to drop still. You know,
that is very possible. Most likely there will be additional fallout that we don't know about yet. There are rumors about crypto.com, which is another one of these big centralized protocols that made some very sketchy movements as well in the last few days. So it's very possible that they also go bankrupt. There are other exchanges that faked a proof of reserves, so that tells you there's a liquidity hole right there as well. So I'm sure there will be some other fallout, but that doesn't mean that the price will necessarily drop lower. It might happen. I think it won't, but from a long-term perspective, it's really irrelevant if it drops a little bit more or not, because we're now in the buying zone, and you got to have a multi-year outlook and just be patient.
Okay. Well, Marco, you've been right about this area generally since I first heard you talk about it many years ago at this point. And that's why I invested in your fund. I know you're going to want to mention that, so I want to disclose that I'm part of it. And that fund has been volatile so far, but only volatile in the 400 or 500% range, which is pretty volatile. But you think that some of these things could go 100 to 1 or 1,000 to 1. Do you still stand by that?
Oh, absolutely. And to give you one example, we worked very hard over the last few months to get access to funding for a new technology that I personally consider the biggest breakthrough since Satoshi Nakamoto invented Bitcoin. This is a new technology that's called Nillion multi-party compute. And that offers something that's called information theoretic security. And that basically means that it's unhackable. And this has really wide-ranging implications for the entire ecosystem. It will completely replace the private keys and a whole bunch of infrastructure. It's a really, really big breakthrough. And this is something that retail investors, they don't even hear about it until it becomes popular. But even a lot of funds don't even have access to be able to invest in something like that. So we just invested in the seed round of that, and we're working on several other deals. And like I just mentioned, I think this next cycle will be super big. So I think all the investors that suffer through that volatility, you suffer indirectly, because we take the brunt force of it. We see this on the front lines. You just get a statement every 3 months, so you're a little bit isolated. But that is the key with this whole crypto thing. It has crazy volatility, but if you look at it on a long time frame, the volatility is to the upside. Nobody complains about volatility if your stuff goes up 1,000% or 10,000%. But people are quick to complain about volatility when stuff drops like 70% or so. But if you can withstand this volatility and you time the exit right, then you can make really life-changing gains. And that's the whole value proposition of our fund.
And how do people find out about it? Where do they go?
Well, you can contact us at info@secondrenaissance.com, and you can go to my website marcowitzer.com, where I have also my newsletter where I talk about these investment opportunities for the average retail investor. So on my website marcowitzer.com or on secondrenaissance.com, you can get in touch with me, and we'll take it from there.
Great. I'll have a link to your website for sure in the description of the video as well. Marco, once again, thank you very much for joining us and educating us about the crypto market, especially now when everything's
My pleasure.
Well, not only that, but we're usually pretty gloom and doomy around here. But
Right,
you've
he's
got
so
a happy story to tell, which I'm happy about.
No, I'm very positive about the future. No doubt about it, that the implications of this technology are so far reaching, and we're still so early. So all the positive that will come out of that, most of that is not even visible yet. So you think I'm bullish? Wait, what happens in 10+ years?
All right, we'll leave it there. Thank you, Marco. Really appreciate it.
Thanks, Marco.
See you next time.